market is mature enough to act accordingly. Now, does the halving, another big theory is the halving propels Bitcoin into a bull run, which is the most ridiculous thing I've ever heard, which unfortunately is spread like wildfire through all news outlets, media outlets, all social media, and it's laughable. It tells me that nobody understands anything about charting, because in the past, we entered a bull run here almost 1 year before the halving. So did the halving propel Bitcoin into a bull run? No, we were in a bull run for the year leading up to the halving. Same here. We entered a bull run, around October-ish, and, fast forward all the way to July, then the halving happened. So does the halving event propel Bitcoin into this explosive bull run? That's a bunch of BS. It's the sheep talk, the talk of the herd. So just set that aside. The simple reality is, if you start hearing everybody in the market saying the same thing, we're probably about to do the opposite, right? So that's one thing to keep in mind. But here's an interesting point. Let's zoom in to the halving back here. When we're in September 2012, Bitcoin was at about $13, right? $13. And then we've got this signal for the halving that the signal put us up here at $219, right? So that tells us like, hey, we're down here at $13, and it gave us a signal well ahead of time that we should look out for this price. And it took us about a little over 100 days to get up to that price. And then we actually went higher. Now, fast forward to the second halving. Keep in mind, there's only been two. A lot of people act like, well, this is definitely going to happen because every single halving this happened. That's absurdity. The reality is we've only had two ever. There's two data points. There's two data points. Anytime you're taking a scientific approach, just looking at the charts and looking at the facts, 2 data points is garbage. We can't base anything off of 2 data points. We need several more data points to have enough data to really analyze. So let's fast forward. We had this high, higher than the 219. Then we went into our second ever bear market. We got out of the bear market here in October. We had a golden cross. We entered a bull run. And then we've got this signal. Again, Bitcoin was at about 600, a little less than $700 when we got this signal flashing, right? And it told us that we should watch the price of about 7,000, right? So we were at around 700, told us to watch around 7,000. It took us, so the first time we knew how long it took us. Let's see about the second time. So we got this signal here in July, and it took us a little over a year, almost a year and a half, to really realize those prices that we signaled, and we actually went higher. So it's the same type of pattern as before. We got this signal that told us we're going to go really high in price. It took us a while to get there, and then we actually went higher. We flashed this signal, told us it's going to go really high in price. It took us really a long time, a year and a half to get there, but we actually went even higher. So how about the signal now? How high is it now, and what can we expect? Because also we need to talk about why this flashed 5 months before the halving, where the others flashed on or around the halving. But first, let's talk about this. So we've got this price here that is a little absurd, but the signal is telling us to watch the price of about $350,000. Now, keep in mind, we only have 2 data points, and we can analyze the data so many different ways because there's only 2. But again, it took a little over 100 days, and then it took 450 days. If we did a multiple there, maybe this one takes 1,200, 1,300 days. there's a lot of different ways for this to play out. However, the cold hard facts are it's flashing the signal. It's telling us to watch this price. Now, a couple more things to pay attention to. This is the stock to flow ratio, which we're kind of in the Wild West in crypto where there's a lot of different versions of this, which pull data from different points. So there could be some stock to flows that are relatively different because the data is pulled from a different source. And because crypto is really new, a lot of the data we have on Bitcoin is always different. So you may see some different versions of the stock to flow ratio. However, the high majority of them are flashing a signal as of recently. How high is directly correlated to the data it's pulled and where it's pulled from and how accurate or inaccurate that data may or may not be. But again, there's a lot of information to keep in mind about the halving. But again, there's only 2 data points. So we have to dig into it further because this is abnormal, where we had a spike 5 months prior. But again, if we rewind the clock, this entire move starting from around January of last year until now has been abnormal on the other side. Now let's get into our next halving chart here. The halvings are outlined in the yellow, where you can see in November 2012, you can see in July of 2016, and then you can see in May 2020. What's interesting here is each time we entered the halving, we changed from red to green. Then we had the halving. We changed from red to green, then the halving, and then red to green, then the halving. Now, each time in the red was representing our bear market, which up until this point, we've only had 3. Now we're technically in our 4th, which we'll get to in a second. But the change from red to green is substantial. We made a few videos about it before, but what hasn't ever happened was for the price action to be inside of the channel as we approach the halving. That's never happened before, right? You can see here, once we had the change from red to green, prices were above this channel and they never touched the channel until we entered our next bear market. And same here, we changed from red to green, prices were above the channel and we never touched the channel until we re-entered a bear market. So why are prices inside of this channel now? Well, we're in a bear market. And we asked you to watch this last week or the week before. We said watch the top of this channel because it coincides with the 200-day moving average. It also coincides with our downtrending trend angle. And here we are at resistance, right? So what else is important is this kind of got pushed ahead. What I mean by that is we had about 100 days, right, from our change from red to green until the halving. About 100 days. And you fast forward here, and it was about 100 days again until the halving. And now, if you take from the green to the red till the halving, we're suddenly at 300 days. So why did this move happen so much faster, which caused us to have this signal 5 months early? Well, let's break it down. If you look at the price action, this is abnormal, and we've talked about it before. We had a high of 20K. We came down to that 200-week moving average, which we were expecting after the 3-day death cross, but we didn't stay there long. And as we had this legendary rally, it happened abnormally, where this should have happened over a period of a year, about a year, for us to break through these barriers of resistance. And we didn't. We didn't really stop and pay attention to anything. So we didn't spend enough time down here creating proper market structure. And we didn't create enough time with this move, creating proper market structure on the way up. Without a proper market structure, it's kind of like if you build a house without a foundation, the wind comes and blows and your whole house is blown down. But if you had a strong foundation, the wind can come, the rain can come, and that house is going to be sturdy. That's what market structure represents, and we just don't have it. We didn't have it around 3K. We didn't spend enough time down there really forming it. And this move really broke all the barriers. And now we're having a move to the downside to get us back on even keel, because we had such a parabolic move to the upside where it's a little bit longer, more devastating move to the downside. And we're just finding our equilibrium. But it happened too fast, which really represents this 5 months before. But again, this is really relative to the data, where it's pulling this data from and what source that data is. So again, if we're looking through a different lens with this chart relative to this one, mathematically they're quite different. They're representing the same thing, so we're seeing the same patterns. Now let's talk about a couple other factors. We have a lot written down here that we want to get to, but again, this approach to the halving is different. Right now we're technically in a bear market. Right now we're below the 21-week moving average. We're in bearish territory on the weekly RSI. Has that ever happened? No, it's never happened. But again, we just have 2 data points. We just have 2 data points. So one thing to keep in mind is, what is the herd saying? What's the herd saying about the halving? It's loud and clear. The halving is going to make Bitcoin go to like $1 million. You know, this is a little exaggeration, but the point is, everybody believes that the halving propels Bitcoin into a bull market, which we've already proved is 100% false. It didn't do that the past 2 times. The bull market happened 1 year before the halving. And this is playing out quite differently, where we're in some trouble approaching the halving. The good news is, in the history of Bitcoin, there will be 32 halvings. So in the future, we'll have a lot more data points and data sets to look at and analyze so that we can come up with stronger theories. But right now, there's only 2 data points, which from a scientific point of view is nothing. So we will use our best judgment and say that this upcoming halving right now is in some trouble. But again, these prices that we pointed out could really turn everything around. And our next chart will illustrate what would happen if we turned it around. We would be on par with what's happened in the past. So here's a chart here, really representing the halving in a nutshell. But what I want to start with is, where was the monthly RSI and the monthly stochastic as we approach the halving? You can see here in the 60s, our white line represents the halving, and we follow it down. We're in the 60s here, and we were also in the 60s in our second halving. But right now, we're just at about 56. So we would need to see some pretty big moves in the monthly RSI leading into the halving, as well as the stochastics. Stochastics was really bullish during this halving, was really bullish during this halving, and we're showing weakness right now. So you can see that the market is quite different. The sentiment of the market is quite different leading into this halving, right? So let's dig into it a little further. So our white lines represent the actual dates of the halving. What we can see here is we had our first ever bear market, our second ever bear market, and our third ever bear market, all of them in distinct bull flags, each one in a distinct bull flag. Now we broke out of that bull flag, and then we had a golden cross. Same here, we broke out, had a golden cross, we broke out, had a golden cross. And then there were 3 distinct tiers, which we've discussed at length. So if we are trying to enter tier 2, keep in mind, each of the past halvings, although only 2, both of which happened at tier 2. They did not happen at tier 1 or at tier 3. Both of them happened at tier 2. Now, the good news is we could potentially be moving right now into tier 2. Potentially moving into tier 2. The only thing standing in our way is 10.5K. That's it. If we got above here, everything would play out as planned here, because this one is taking a couple steps back. We're looking at the really broad scope. But again, it's a big if. It's a big if. This would turn the entire market. We would enter a parabolic phase pretty quickly to 14K. And if we broke that, it would be pretty quickly to 20. Those are the two main points, because of the bodies of the monthly candles dictate 14 and 20 are the be all end all. 14 is pretty strong because of the bodies of the candles. But that's what's standing in our way. So we're trying to get to tier 2. The only thing standing in our way is 10.5K. Everything else has happened according to plan. Although when you look at the smaller picture and you start picking apart these moves, this move into this halving is very different. We're in a bearish case scenario. There's not a lot of momentum. There's not a lot of hype. We're not in the midst of a bull run. It's very different because potentially these moves happened without creating the proper market structure as we were at our bottom and moving through the bottom. This should have taken significantly longer, and it would have been a lot healthier for the market. So that's the storylines right now.